If you're planning to take a personal loan but don't know what is it about, then this is a video for you.
Welcome back to the Financial Fitness channel. My name is Ying.
I'm Ivy.
So if you're new to our channel is all about money and self-development tips. If you have not subscribed to our channel, remember to hit the subscribe button down below so you won't miss out on our future videos.
So what is personal loan? Personal loan is an amount of money that you can borrow from the bank legally. And you can borrow this money for many different purposes, whether it is to start a business or pay for marriage expenses. Personal loan is one of the quickest and easiest way to get funded. There are two types of personal loan, secured and unsecured. But generally, most of the personal loans in Malaysia are unsecured personal loans. But you must be wondering, what are the differences between secured and unsecured loans? Well, an unsecured loan, like personal loan, means that you do not need any collateral when you apply for the loan. For example, housing loan is a secured loan because the bank uses your house as a collateral. So if you can't pay your housing loan, the bank will confiscate your house and auction it to another buyer to settle your loan. That is why the interest rate for personal loan is much higher than the housing loan, because without a collateral, the bank might face a higher risk of not getting back the money they loan to the borrower.
So how and where can you apply for a personal loan? Generally, people apply for personal loan with the banks. But you can actually also apply personal loan with private companies such as Aeon Credit Services or money lenders. The documents that is usually required for you to apply for a personal loan is a valid ID and an income proof statement to show that you are an income earner, and yes, generally, you need to be an income earner to apply for a personal loan because the bank or the lender needs to know whether you have the capability of repaying the money you borrowed. So is personal loan fixed? How to calculate personal loan? Personal loan interest rates are fixed, which means the interest rates that's charged on your loan are fixed at a designated percentage. However, the interest rate calculated for personal loan is different from housing loan interest. For example, if a bank offers a personal loan interest at 8% and you're looking to borrow 50,000 with a tenure of 5 years, your total interest would be 50,000 multiply 8% multiply 5 years, which is 20,000, which makes your total monthly repayment to be 1,166 per month. By the end of your 5 years tenure, you would have paid 70,000. That's 40% of interest paid for a 50,000 expense that you did 5 years ago. Of course, when in times of emergency, you may not have the time to consider all of this because you need the money urgently. But if you have the chance to consider about it, you realize how much interest the bank are actually earning from you. Despite the interest stating at 8%, the interest calculations are not compounding. So it is not the same as our typical investment return. So what is the effective interest rate you are actually paying? Or in other words, how much return the bank is actually receiving from their investment by loaning us the money? But we will not go too deeply into the calculation. If you're interested in working out the effective interest rate of your personal loan, you can refer to the calculator link at the description box down below. What we would like to emphasize in is the amount of interest that the banks are actually earning from these personal loans and how much we are actually paying for it. So based on our previous example, the bank loans you 50,000 as an investment for them, and in return, they are asking a 8% flat interest return, which is 1,166 ringgit monthly. But the effective interest rate that the bank would have earned is actually 14%, and that's really high. If we compare investment return in the market, FD is only around 2%, EPF 5%, ASB maybe around 4%, but we are paying 14% return to the bank.
The advantages and disadvantages of personal loan. Personal loan can be very helpful under the right circumstances. For example, if you're looking to build your credit score, you can take a small personal loan, and as long as you repay back regularly or on time, you can boost your credit score. Apart from that, as I mentioned before, personal loan is one of the easiest way to get funded. And therefore, if you have an emergency or you just needed the lump sum of cash immediately, you can consider getting a personal loan, because there are some banks that do approve loans as fast as 1 to 3 working days. So before you apply for the loan, do inquire with them about the processes and also how quickly you can get it approved. With all of the above said, although personal loans do have high interest rate, taking a personal loan doesn't always mean it's a bad thing. It really depends on what you are using the money for, and you have properly considered that taking the high interest is worth it. Just be aware that failing to pay your loan on time can lower your credit score. And having a lower credit score will not only affect all your future loan approval, it will also be very difficult for you to negotiate for a lower interest rate. Imagine if you want to buy a house, but you have to pay a higher interest rate than everyone else just because you have a bad payment history. So if you don't want that to happen to you, make sure that you pay your loan on time and think twice before taking on a loan.
So that's all for today. If you like our video, please do give it a big thumbs up. If you have not subscribed to our channel, remember to hit the subscribe button down below so you won't miss out on our future videos.
And we will see you next time.
Bye!